Hey, this is David for BigBits, and I finally got the stream up. We've had some issues doing the restream with TradingView. I apologize about that. Just kind of going to do YouTube today. TradingView's kind enough to work with me to help get the stream going over there and getting access to some software. So for now, we're just going to be on YouTube today. I want to kind of make this as much of a daily process as I can. There's a lot of stuff that I want to talk about that I really don't have time to make videos for constantly. It takes a lot of work to, edit and do all that stuff for the videos, and of course I've got issues here with stuff popping up on the screen. What else do I have? This is just one of those days. There we go. Finally got the taskbar to go in. Alright, so yeah, the issue with TradingView's streaming is that it is a browser-based streaming client, which means it's recording through the browser. It's requesting access to your camera, to your desktop, or to your microphone as well. And the issue with that is that through the browser, it takes a lot of resources. And in my particular case, I wanted to have this excellent branding that you see on the screen with my logo down there. And you just can't do that with the default recording. So what I have to do is I have to actually project this layout where I have my branding, the BigBits logo, which I believe is up here, and the nice curved edges. In order to have that, I have to use OBS, which is a streaming software, and I project it onto a third screen. And on that third screen, then I record, and then it also uses my microphone. So it was basically, I think, the combination of OBS and the actual client itself on TradingView that was a little bit too much. So hopefully they can get me access to OBS and we'll be fine to go from there. So I apologize to those of you who tried to watch and couldn't earlier, and I know I went on and on about this now for 2.5 minutes, but just in case anyone from TradingView watches this, because I know every once in a while they see some of my stuff, so if they're seeing this, they can get an idea what's going on there. But I've already talked to them, and they should be getting me access to be able to use OBS on their system, so hopefully we can take care of that and start streaming a little bit more often here. And let's see, one thing I did want to talk about, I did post a new idea last night on TradingView. So if you aren't following me on TradingView, please go ahead and do that. I'm going to try to post some more ideas. I posted this one last night. This is a nice little text idea with some ideas about what's going on, and I'll explain what's going on there. But I'm also doing some of the video recordings over there as well. And as long as the clients will actually work, you can see that here. As long as the recording client on their website will actually work, then I have no problem recording ideas over there and then editing the videos and uploading to YouTube later. But that just wasn't the case today. So I did some educational stuff over there. That's really good. And okay, on for the idea today. I basically said why I'm not wanting to be bullish just yet. Let me pull up my charts just a moment. Okay, that was on the other screen, I understand. But let's see. So this is the idea I posted, and really has a lot to do with these moving averages. So the green, the yellow, and the red, respectively, are 50, 100, and 200 moving averages, and the white one there is the mid-Bollinger Band, which is a 20-period moving average. And one of the things I've noticed is that here recently, the alignment of these moving averages has started to trend towards being bearish, and by that I mean they are in ascending order pretty much to their look back period, layered on top of each other, and I'll show you what I mean by that in just a moment if I can find a good image of it. Yeah, so we can kind of zoom in here. You can see the white is below the green, which is below the yellow, which is below the red. And typically, when you see that, you're pretty much guaranteed to be in a downward trend. And even then, you might even ignore the white line and just focus on the green, yellow, and red. And that's what I've kind of focused the idea on, except I also included all of them, the white line as well. And we are looking for the same thing to kind of happen here on the SPX. And I'm focused back here at the end of February. But what's really, I think, is going to happen is we're going to have something similar to this, and then something similar to this, although it's probably not going to be as severe. We could be setting up kind of a downtrend just because we haven't seen this in a while, and to show you that this is when it actually occurred again with the 200 period moving average going down. So not only do they need to be aligned correctly, I want to see all of the moving averages moving downward as well. So back here, when you had all these crossovers, the 200 was still moving up, and what I wanted to see was everything kind of moving down back here. And I haven't even touched the SPX yet. I'm trying not to read everything that I posted the other day, so you don't have to do this again. But you can see there's some similarities here back to the end of February. You had this kind of crossover while the 200 was still moving up, and you had that here. Now, the second batch of crossovers was right here. And you can see that's when all of them were pointing down. And I honestly don't know if we're going to have another drop like this. The TEA on the weekly and monthly charts doesn't suggest something like that, in my opinion. So what I have a feeling is going to happen is we will have probably some sort of period of consolidation, kind of similar to how we did here at the beginning of March, and then maybe a little bit of a drop, but probably nothing nearly as severe as we did back then, unless they have to like shut down the economy again and there's another liquidity issue amongst all the markets. So you can see now with Bitcoin, you have the 20 below the 50, below the 100, below the 200, but the 200 still moving up. So I'm not really looking at that. Yeah, with the Fed involved, that was one of the other things I mentioned here was that with unlimited QE, like how long do you really want to let the price go down? So I'm going to be waiting for a little bit lower prices before I really go all in, but I'm probably not going to wait too long. Wait till there's finally some good signals to buy and then do so. All right, so yeah, I think this is just the 4 hour and this is just the 1 day. I did mention that there is a range here. It's hard to see because the line lines up so well with the current price on the chart there, but there's a red line here serving as support, and you have your downward channel there. So what I kind of expect to see is consolidation between here and then perhaps a breakdown back to the 100 period moving average, which would probably be down towards the middle of July, and that would be around 2900 on the SPX. So that's what I'm kind of expecting to see. I'm hoping for even lower prices than that, honestly, because I have increased my contribution to my retirement plan. And the more I can get for cheap now, the better. Because honestly, I was talking to some people that I know, and once the market does recover, you think it's going to just explode because there has been all this new money introduced. Even, they're giving all this unemployment money out for people who haven't worked jobs, but that money goes somewhere. It goes back into these corporations. And where does the money go from the corporations? If they don't have to take out new loans from banks, they get to keep it. If it goes to the banks get to keep it, and they're borrowing money from the government. So it's going to come back some way or another, and the market's going to be just fine. And of course, the bank buys services from companies as well. So once things do kind of turn around, it could very well explode, in my opinion. All right, so I need to actually show you the chart as it is currently. I've hidden the Bollinger Bands because I'm looking at the weekly chart. And let's I wish it didn't do that. Okay, so we'll just leave both of them up here. What I am concerned about here is this consolidation on the weekly, uh, kind of looking more like a flag as opposed to this descending triangle. Let's see, where's that line at? I mean, you could actually argue for something like that and it be a flag on the weekly. But I am watching the upper band on the weekly chart as well because it's coming down pretty quickly. You can see the Bollinger Bands encompass the range of about the last 20 candles. So the lower bounds are going to be very low. The upper bounds are going to be falling because we are losing the highs now here the next 2 weeks. You can see with the shaded area going to be consuming those two candles onto the next one. So it should come down. I would expect. Of course, I lost my drawing tool. I would expect something kind of like that, and then on the bottom side as well, it'll come up in the next 2 weeks. I honestly think price could jump back up here, and it's hard to say where it would go from there, but I'm kind of at least thinking that prices, if they don't come back down to this area, which kind of happens to align with that mid-July theory that I had with the 100-day moving average. Looks like the mid band kind of aligns with that, and you would think that it would at least come back down to the mid Bollinger Band. It kind of did here, but there was also a lot of other stuff that held it up there as well. So yeah, it's a little bit confusing right now, but with the way these coronavirus cases are going, who knows what's going to happen. So I'm just keeping my eyes out for opportunities to buy. Let's go back to the daily chart and look at that weekly line now. So yeah, on the daily chart, that line doesn't make a whole lot of sense. So that's about all I really wanted to do for TA. Bitcoin's really not all that exciting right now. I'm stuck between the moving averages on the daily, the weekly, still above the 50, which is really good. I kind of expect we'll come back down to the 50, but who knows how long that'll actually take. What was it, the daily? Yeah. So those lines here in a couple days, the 100-day will line up with that bottom Bollinger Band on the weekly, or the mid band on the weekly. No, the 50 on the weekly. My apologies, but I believe that Bollinger Band is around there somewhat. Yeah. So it may take weeks before those align, but I don't think it'll actually take weeks to get that kind of movement. I'd be surprised if it does. All right, so I did want to share some updates on the stochastic weights. I've been working on that just a little bit. I've been trying to find some divergences with the code, and it seems to be doing okay. It's not as great as I would have liked. Where is that one that it found here? So it found a divergence here, but it failed to find the larger divergence, which is something I need to try and correct, because there was a very large divergence there from this point to this point, and I would have hoped for it to have shorted there. But it is coming along well. I've added a few new features. Let's see, we added smoothed RSI as well, and then I've added the customized oversold and overbought features, like with my smoothed RSI indicator. So you can adjust those, and it changes the amount of signals that you see here, and it's thrown a few good ones. This one was a little early. That one was actually really good. So it'll be interesting once I convert this into a strategy to see what's actually going to work. But the way I've done it to find the divergences is actually going to be in a way that it won't repaint, so that once it throws that signal, as long as that candle closes that particular way, it's not going to repaint. So when you do a strategy, it won't throw the signal again on the next bar. It could 2 bars later, but it shouldn't show you a signal and then a bar or two later no longer show you the signal. Once the bar closes with the signal, it'll always have the signal associated with it. That reminds me also, with the smooth RSI, we gave it the MA type as well. I'm trying to think if there's anything else I can find that ranges between 0 to 100. And let me reset all these, and we'll just enable everything at once and see if we get anything. So you got one here, which that wasn't that bad. But really, I would like to find something like this, but that's not really a divergence because it went lower. This one was really good, actually. These weren't too bad, but price just kind of consolidated there, so it wasn't that great. But yeah, I've done a lot of work on finding the divergences here, and also really just looking at these levels is one way to actually trade it, so you don't actually have to find the divergences. So like, for example, you want to find something that peaks and then crosses down. You would have one here, which that's actually really good. You would have had one here, which was not so good. So that one would have been a good one for a stop loss, but you would have had another one here. That one wasn't good, but you would have also caught this one, and that would have been part of one of those larger divergences that I'm talking about. So you would have found that one there as a short. You would have been a little bit early, but you still would have been there just buying that. And if you're manually trading and looking for the divergence, it's pretty easy. I just need to find some good code. I tried copying some of the code, but the way they had done their divergences, I don't really quite understand the code yet, so I'm going to have to go back and reread how they've done their actual code to make that actually happen. And yeah, so I see why this one's actually happening. Some of these signals definitely are false positives, something that I would not want to buy. So there's still a lot of work to be done on that. So I think for now I'm just going to focus on the actual signals they throw themselves, maybe weighting stochastic RSI a little bit heavier, and also the smooth RSI a little heavier. So that one was pretty much perfect there. That was good. A pretty good one there. It's not terrible. So that was calling for you to short right before that dip, so that would have been pretty good. Yeah, that is just a tough time there. This is our 15-minute candles. I really designed this for like 1 or 4 hour. And this is where I would also want to change the oversold and overbought ranges. Oops, wrong way. So yeah, that one missed that divergence. Still got to go back and find that somehow. Yeah, so let's compare this to the one that I wanted to add as a comparison for divergences. So this is what I was kind of trying to go for. I need to figure out how they actually did all this in their code, because it's really good stuff. So if you can find a divergence with this and a divergence here. So for example, you know, right here, you would have looked for a divergence continuing down, but then what I'm trying to do is I'm trying to look for a divergence that no longer exists when there's a crossover. So there's a crossover pretty much immediately following the divergence, because it would continue to throw the divergence all the way down as the blue line went below the orange. So you would, in a lot of cases, if you were just looking at divergences, you would want to, well, you would be tempted to buy every single candle as it continued to drop. Whereas here, we're using the stochastic weights with these divergences. So as the price goes up here and goes, well, as the indicator goes up and this goes down, the price goes down, we're going to want to wait till a crossover occurs here to buy, and that could signal that trend change. Now this one was kind of tough because it did kind of consolidate after that, but you would have been in much better position if you waited till this candle, as opposed to if you had tried to start buying up here when it first started to diverge. Let's see, it's 122. So I've got a few more minutes here. Let me see, there was another thing that I was looking at, and that is the volatility weighted moving average. And we started talking about this in one of the last videos. And that is a 50 period moving average. So let's add a moving average on the chart. So I've also done some work to this one. You can tell it's pretty much a simple moving average, but it's weighting the higher volatility candles more. And we can actually adjust how much weight those high volatility candles have. I've added a peak volatility weight. So whenever a candle is in the peak volatility segment, then it will be weighted much heavier. You can see it makes the green line go a little bit further away from the blue line there, the more we weight those very volatile candles. And let's see, we've already talked about this, and this is the smoothing length. This is to kind of make the line a little bit smoother. So if you were to plot the actual volume weighted moving average, you would have something like this. And I'm trying to find a way to actually use this, because you would think that volatility should matter, but I also combined it with volume weighted volatility, and the line is just the simple moving average, so it didn't help any. What I'm thinking about is using this as its weighted moving average, and you can get an idea for trends here somewhat. So you can see once the volatility weight trend gets higher than the simple moving average of the same kind, it kind of signaled that trend going up. You can see one here, here. There's quite a few on the downside here. See, there's consolidation here as they both kind of move sideways for the most part. And then trend down, trend up. As long as they're not moving sideways, which they are doing a lot of right now, it's pretty decent at finding a trend, but not working as well as I thought. But that's part of the process of making these indicators, is coming up with an idea and testing it. That's why they call it data science. You form a hypothesis with your data, you create the instrument that you want to use, in this case the volatility weighted moving average, and then you kind of run some data through it to see if your hypothesis is correct. And in this case, it's not looking too good. I think there's some better stuff we could do, and somebody showed me something called an exponential whole moving average, which I really liked. Where is this? Am I really searching my scripts when I do that? Here we go. And this is like a whole moving average, but it's even quicker, and it doesn't have the overshoots as bad. So this is one that I'm starting to take a look at as well. Let's put it on a 50 period like we've got the rest of our stuff. Okay, so this is a 50 period, kind of like what we've got our other two moving averages on, and you can see just how quick it is compared to the other two, and it's a nice smooth line as well. So that's one I'm going to keep an eye on here coming up as well here. And honestly, might be something I put into my scripts. What in the world have I done? And so that's the weekly. It would have worked out pretty well for you if you traded its color changes. Up until recently, of course, everything. It's like everything's kind of designed lately to shake you out of whatever position you're in. It's been really kind of ugly ever since this breakdown here. That looked like a nice flag too, by the way. So ever since that breakdown, it's like it's been people just trying to shake you out of whatever position you're in. It's unfortunate. Let's see. I want to check on basic attention token because I knew it was doing really well and then it kind of crashed. I got a bunch of alerts. I was looking for 30 cents. It made it all the way up there. I'm a little concerned now that it's just going to lose momentum here. Let me actually pull this up on this chart because I like these indicators better. Yeah, everything still kind of looks pretty good for it on the weekly. It hit the upper Bollinger Band, which I was going to use to take some profit on, but I just was too busy this weekend. And it only hit it for, like a couple of hours at most, too. It's, again, another one of those things that's pretty unfortunate. Unlike a lot of other tokens and coins recently who seem to be, like, absolutely flying and staying up there. It's like whenever basic attention token shoots up, it gets hit back down pretty quick, but it continues to climb, so I can't complain too much. Do you want to see this on the daily? So yeah, it's percent B, or yeah, it's percent B was way over the top here, so that makes a lot of sense why it got knocked down pretty quick. But we're still trading above the mid Bollinger Band, and you're about to have that alignment I was talking about at the very beginning of the stream here, where you have the white above the green, above the yellow, above the red, and all of them trending upward. So that'll be the first time it's done that in a while. And it did it here slightly, but yeah, that was kind of a fake out, I guess. So who knows? This might be another fake out, but once again, you'll have them all aligned here, and we'll see how that actually works out. So I also want to take a look at MCO again. This one is interesting because it's bouncing really well today. I'm kind of surprised by that. This is the daily chart, so it's back up to 4.25 after it went all the way down to what, a little bit under $4. The chart just looks horrible on the weekly. There was a lot of divergences. We've talked about this one before on this channel. There were a lot of divergences, but the weekly, maybe not so bad on the USD chart here, because that's kind of within a margin of error of being support on that weekly moving average there. But the Bitcoin chart just doesn't look good. Yeah, so it broke well below, closed well below. It's just not a good looking chart, honestly, versus Bitcoin. So I'm not sure if I'm going to continue to average in down here or not, or just hold what I've got and see how things go, because I just bought a few of them. I was really hoping we'd bounce from the 50 there, but we could very well continue to drop. I want to see something like this, where the stochastics bounce back up. And if we compare this to where we were then, it could very well continue down much more. Let's look at something different like Ethereum. I've got to get off here soon. Alright, this is the Ethereum weekly chart. It does not have everything aligned just yet. It's very similar to the other ones, except it's trading below its 200 week. And it looks like its 200 week served as pretty good resistance. I mean, it's pretty clear, I should say, resistance, as in the fact that it made it to the line almost exactly and then came back down. Which is kind of interesting, because if Ethereum were to remain bullish and the market turned bullish because of it, Ethereum would bounce hopefully off of one of these moving averages and then continue upward, and its moving averages would be aligned. Let's see what it looks like on the daily. I bet it looks pretty decent. Yeah. So pretty much right now everything is aligned. It looks like it's trying to reclaim that 50, and if it does, it'll have to bounce pretty quickly to keep the 20 above the 50. But once it does, it would have all 4 moving averages going upward once it gets the mid band. But honestly, the 3 key ones are all moving up right now. And why am I more interested in crypto than stocks? Because I got started in crypto. I have a retirement fund for stocks. They handle all of that. I like stocks. I've started getting into them a little bit more, but I don't know. I got into crypto, and I don't know, it's just the first thing I got into. I didn't really care too much about finance or trading before I found Bitcoin and Ethereum, and I just kind of stuck with it. I like those. But what I am looking for on stocks right now is AT&T. That's one I've been buying some. I'll show you that chart. The chart doesn't look that great, but what I'm interested in with this one is the dividends. Like, it's ridiculous. You're buying a $30 stock for $2 worth of dividends per year because you get 52 cents every quarter. That's kind of crazy if you think about it. If you buy one of those stocks right now, in 15 years, as long as they continue paying dividends, you're going to have essentially that stock paid for itself after 15 years. That's kind of crazy. There's a lot of other stocks like that. Like I said, I'm not really too into stocks, so I don't know a lot of details about everything going on here. But AT&T is pretty nice. That's a lot of dividend for such a cheap stock. And I'm kind of surprised to see that it's went down so much, or at least stayed within this range for such a long time. Let's see, that's all the way back in '99. Let's see. It has continued to kind of move up, but within its current range, it's on the lower end, and I honestly don't see it being worth less than it was back here in 2002. So I don't really have a problem buying AT&T for a while now, because if it does ever get back up to its all-time highs, that's $50. So you gain 66%. Plus you get dividends if it ever makes it back up to its all-time highs, which I believe it will. I'm really hopeful for 5G, and one of the things that I like about 5G is it's going to enable de-urbanization, and I'm actually an employee in housing finance, and there are a lot of benefits to living in rural housing. Plus, a lot of people aren't really big fans of living in bigger cities. I know recently there's been a lot of people leaving the big cities, partly due to coronavirus, partly due to riots. But personally, I have some land that I could use out in the country that I can't because there's no internet access, no reliable internet access. And if 5G becomes available out there, I would be very interested in building and moving out into the country with that internet. Baby boomers will move out of the cities. I don't know about that. Mainly because the older you get, the closer you want to be to healthcare. And if you move too far out, if you call an ambulance, you're out of luck. Demographics have them leaving. Yeah, perhaps. It's going to be interesting what the younger generations do because they don't have money to buy houses. Um, and this is from data that I'm hearing where I work and stuff. It's all public data, so I'm not like sharing anything private. But the younger generations, of course, are living with their parents longer, and when they're moving out, they're not buying houses. They're moving into apartments and rentals and stuff. So there's not as much opportunities out in the country for them, but at the same time, baby boomers are getting old, and when they transfer their wealth down and their land, who knows what's going to happen there. But for me personally, I would like to get a little bit further away from the city. Once there is 5G out there, we will have the ability to purchase anything without going anywhere, which you already have using Amazon, and you have UPS, and you have FedEx, and all these shipping providers that you don't have to go into the city as much as you do. You can telework. There's really not much reason to be forced to live in the city. The one major exception that I think of is, younger people wanting to be social. Well, there's actually two: the younger people wanting to be social and the older people wanting to be close to healthcare. Other than that, for me, I can't think of much of a reason to want to live in a city. But that's just me. I grew up on a farm, so I'm probably very biased. I enjoyed the peace and quiet, and I enjoyed not, opening my door and seeing other people. It's kind of nice to open your door and, see wild turkeys or deer running around. And, you're sitting on your couch at night, you're trying to watch TV, and your neighbor's mowing the lawn. That's annoying. That's just really annoying. That happens a lot here. But yeah, that's one of the reasons I'm looking at AT&T, and T, and I'm thinking also SpaceX is doing Starlink, so I imagine AT&T and T and some of the other data providers will want to do something that competes, and either they're going to want to try and push 5G as far as they can, or less likely they'll try to emulate what they're doing with Starlink, but more likely they're just going to push 5G as much as they can. And from what I'm hearing, Starlink is probably going to be like 100 or more a month for, like the basic plan. There's no real data out there, but it's going to be pretty expensive, and there's no telling how many people are going to use it and how reliable it's going to be. I mean, they are using low Earth orbit satellites, so they are going to have much better latency, really good connections, but they're still going to have to deal with weather, the clouds, these sorts of things. Although I imagine, being LEO satellites, that they'll be able to penetrate a little bit better than the geostationary satellites that other companies use for their satellite internet services. But yeah, it's a shame. I On the land that my parents have, we we've looked at building out there in the past, and you could maybe get cable internet if you paid the service provider to build the line out a little bit further. But even then, it's probably going to be on the low end of their service. You're going to have a lot of latency because you're on the outskirts of the town. Their hub is going to be right in the middle, so you're going to be dealing with more hops most likely in that case. So it's not really ideal. Oh yeah, it is. It's big money. Like our land, we would be fortunate in the fact that we had service like just around the corner, like quarter mile or so. So they might have been able to run it across the road and it not be too big of a deal, but it still would have been thousands of dollars. Pretty much by the time you build a home out there and you account for, travel cost and all the other expensive, it just made the picture a little bit less desirable. Okay, yeah, I've run a little bit late on the stream, but I guess that kind of makes up for the fact that I couldn't get going when I wanted to. I'm going to hear back from TradingView and try to set up a stream with them using OBS. So we'll be going to doing the dual stream again, hopefully soon. I'll have to figure that out. Uh, Hopefully everything works well the next time, but that's going to be it for this one, guys. If you all have any questions or anything, just leave a comment or shoot me a message on Twitter or Discord or even on TradingView through their messaging platform. But other than that, I would like to thank you all. Cheers to you too, man. Have a great day, guys.